Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his Monday expert and good friend of the channel, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you today.
Nice to see you as well. So one of the things that I've talked about for a long time that's kind of right up in people's faces this morning is the dichotomy of fear and greed. And there are times when there are extremes, but usually we're kind of in the middle. I think we're coming out of a cycle where greed was kind of the everything goes up, the everything bubble. You nailed it. I mean, you nailed it 2 weeks ago when you said the great deleverage is starting. Nailed. And we are kind of seeing that continue to ripple through 14 or 15 days later. So I think we're seeing the extreme where fear seems to be building. And as an investor, I mean, people won't like to hear this, right? I like when fear builds because assets get repriced sometimes at crazy levels, and that's where a lot of money is made. So talk about fear and greed. And again, your call on the great deleverage from 2 weeks ago was awesome.
Yeah. So, you've heard the old adages, buy when, everybody's fearful, and sell into the greed, when everybody's greedy. And, fear will compound as things get more dicey. So we're just at the beginning stages of the deleveraging, and, fear will feed on itself. So generally, the people that are afraid are the ones that are over leveraged, overexposed, or just don't understand what they're investing in. A lot of times people are afraid of what they don't understand. And, especially in the crypto space, I mean, there's people out there investing in stuff they have no idea what it is.
Yeah.
And they're looking at values now or where they were recently and not looking at, well, where did we come from a year ago? And some of these things are up, 10, 1,000, 10,000, 20,000%. It's ridiculous, to look at the prices of things. And people say, well, it was 60, let's take Bitcoin. Okay. Bitcoin hit 69,000, a couple of months ago, and now it's down in the 40s. So they're like, well, we were just at 60 and it's 40. We're on sale. Everything's on sale. I'm like, well, wait a minute. A year before that, it was like 5,000. So is it really on sale? Because it hit, what I'm saying? You got to look at where it came from and where it can go. Good times never last, bad times never last. But the one thing that is real is that as, markets deleverage, and as, the waterfall cascades and continues, more people will get more afraid. And then you get back into a situation like we saw back, March of 2020, when the market just tanks and tanks and tanks. The key to that fear is, will the Fed step in and stop it and supply comfort to the markets? And that is something that everybody still thinks. They still believe the Fed, is still there. They're still going to step in. They're not going to let the markets go down, but so low. So that's kind of, we've gone from fear to complacency. That's kind of where we're at.
Oh, I like that word, complacency.
Yeah, because now the Fed's there. They're not going to let the markets fail. They're not going to let things go down. Right.
Yeah, the Fed put. And that's just so if you're new to investing and you haven't heard that actually started in a Greenspan, right? The Fed put, which is 25 years ago or something crazy. Yeah. So again,
everybody's counting on that again. So when I say deleveraging, so there's a couple things, and the reason I called a couple of weeks ago, because it's easy. We're coming to the end of the year.
Yeah.
Everybody's closing their books out. They're going away for the holidays. They're locking in their bonuses, rebalancing portfolios. So there's some of that. Some of it is the fear of the Omicron. Some of it is the Fed, what are they going to do Q1, Q2 next year? We know they're going to raise rates and things like that, but there's a 6-week kind of grace period there for people to continue their deleveraging and reposition themselves. But what everybody knows now is, when you go back to March of 2020 and you look at the amount of liquidity that was put in the market and look at the levels of the markets, all of them, cryptos, stocks, everything, commodities, real estate, it's all been because of that. So the question is, how far will they let it go down the other side before they jump back in and we go back on that run again? So all the values are artificially propped up. They have been. It's been a direct relation to the amount of liquidity pumped into the markets. So what we need to see now is how far that's going to go. And that's why I say complacency, because, investors know, well, the Fed's going to jump in. So we'll just, we'll go and take profits. We'll let things pare back down, and then we'll jump back in, with the Fed when they come back to the table.
Yeah. So this next question is not stock advice or anything like that. I'm just curious what you see going on. So I just looked up on my phone, I think this is S&P, right? Yeah. The S&P 500 today is 45.38. call it 45, 40. The March low of 2020 was 36.36, according to my phone. So what is that? That's like a 20% haircut from here, roughly.
Yeah, it had to have been lower than that in March.
Yeah, I don't know. I got 52-week low of 36.36. What day is it? Oh, it's because it's past that. Actually, it's not. Sorry, I stand corrected. It wasn't. No, it was 2020. So that's more than a year ago. God, we've been in this thing for almost 2 years.
Yeah.
So that was actually a low of
2,200.
2200. There we go.
Yeah.
2280. Man, we've been in this for more than a year. Jeez.
Yeah. So it's double. All markets are up. Traditional markets are up well over 100%.
Okay.
The Dow was, 18. Dow was 18,000. And prior to that, before it went down, it was 30,000. Dow 30. It dropped to 18.
Now
and then, we've maxed out at 36. So 100%. Markets are up 100%.
Not bad. So again, 100% rally means, I guess the thing I've always told people, because I'm classic for not going into stocks because I got burned so bad. It's blah, blah, blah. Right. So I missed 100% run up. Absolutely. But
so, here's what you got to consider. Okay. So stock market generally, real estate market in general, 10% a year, right? Is pretty much what you've averaged. So if you go back to, we were kind of on our way up before the pandemic hit March of 2020. So if you go back to those levels and factor in 10% a year, we should be realistically, take the Fed out of the equation, 10% higher than we were a year ago. We should be up 10%. So the Dow should really be at,
what would you call that? Let's go back and look.
Let's see where that puts us. So like I said, we were at 29,482, back before the pandemic hit.
Okay.
So, basically.
So you're looking at the
January
Dow.
of, let's look at January.
Yeah, so
January of 20, January 1.
Like 29-ish?
Yeah, 28, 29. So 10% from there. So 30, 30 some thousand.
Okay.
So, we're getting back to that level about where we should be. We're about 34 now. So okay. I think realistically, you may see a drawdown back around that 30, 31,000 range. And that puts you on pace with where you should be.
Okay.
To give you an idea of what that looks like from today, that would be a drop of about, 10%.
Yeah, 10% or so. Yeah.
Yeah. And we've already come down right now since the peak. We've already drawn down about to today, about 5%. So overall, you're talking about a 15 to 20% correction, which is very healthy, normal, and expected. And that will put us back on track with regular trajectory. So, I think the Fed will let the markets go as much as 30%. You start getting below 30, they're going to jump in, but they'll let, that normal correction come in. So for everybody watching, healthy levels in the markets are probably another 10% down from where we are now in stocks. We're talking about S&P. NASDAQ has been taking a big beating. That's been hit a lot harder, but just if you kind of average things out across the board, that's probably where we should be.
So you see some more pain, again, not financial advice, just one guy's crystal ball.
Yeah. Especially this week, next couple of days. I mean, I don't know, right now we're probably down 600 plus points, which is, 1%. So the Dow right now is down almost 2%, 1.9, S&P 1.8, NASDAQ 1.9. So I think the next few days, we're going to continue to see a little bit, a little bit more of a drawdown.
Yeah. The other thing I would like to say kind of in this, again, watching markets for 20 some odd years is I think your point about natural drawdown of 15 or 20% kind of makes sense. But I think the last point people need to hear is I don't think the Fed gets interested in a 20-point correction. I think they get nervous, like you said, at a 30-point correction. They don't mind it going back to trend. It's when it gets past that and it kind of, self-perpetuating. That's where the Fed put comes in. And that's what they saw in February of 2020 was like the bottom just came out and they were worried about companies paying their debt. That is what happened. The bond market froze and we had a lot of companies that had a lot of debt that suddenly wasn't selling anything and their paper was due. That's why they came in and started buying in the bond market because the economy could have gotten really, really ugly. We have so much debt in the system. We had a lot of debt before. We have a lot of debt, more debt now. So it's
and again, crazy. This deleveraging goes all the way back to 2008 and 9 when it all started. So, I mean, the markets have just been a major bull really for the last, 30, 40 years, but more particularly, the last 10 or 11 years. So you got to take some of that off the table. The the pandemic is still the caveat out there that we don't know what the real results of that are going to be. We don't know what that's going to look like, especially right now with the major resurgence we're having of the variants, whether they're mild, whether they're not. It's still out there and it's still affecting things. I mean, they're shutting down in Europe and stuff like that. And, I don't think you're going to see that happen here, but we'll see.
Yeah, we'll see. Well, Greg, do me a favor. I'm going to sneak in a fourth topic, but before I do that, how can people find you?
Yeah, gregdickerson.com. All my info's there. YouTube podcast. Go check it out.
Thanks, buddy.